Welcome to Alpha Recap, your aftermarket rundown from stockalpha.ai. We closed the books on another headline-heavy day, and we've got AI upgrades, a flurry of legal notices, some M&A moves, and credit news to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Glad to be here. Lots to dig into. Today felt like a two-track day. Big thematic AI headlines on one side and event-driven legal and reputational risk on the other.
Exactly. Let's start with the AI momentum because that's what drove a lot of analyst chatter. Philip Securities upgraded Alphabet, largely citing the AI opportunity from products like Gemini and search innovations.
Right, and Nielsen launched a product called Ad Intel AI that positions its person-verified media data as an AI product line. That's the second data point that pushed the narrative that data and scale can be turned into paid AI products.
So, what really stands out here is that both an incumbent platform and a legacy data provider were speakers in the same AI story today. That reinforces the idea that monetization, not just research, is back on analysts' radar.
When you step back and look at this, the market has been waiting for adoption signals, pilot customers, pricing tiers, annual recurring revenue conversions. Those are the metrics people will now hunt for.
Yeah, that tracks.
Switching gears, the legal and reputational headlines were loud today. Law firms issued lead plaintiff notices for Insulet, BlackRock Coffee Bar, and Peabody Energy, and a former banker broadened harassment and discrimination accusations against JP Morgan Chase.
Those lead plaintiff notices are early stage, but they matter because they widen claimant pools and can extend a headline cycle. For listeners who aren't legal specialists, a lead plaintiff notice is the first step in a securities class action process where law firms invite investors to step forward to represent the class.
Right. And when those notices drop, you often see big swings in volume and option implied volatility around the affected names. Today, we definitely saw that pattern.
Honestly, I was a bit surprised by how many of these popped up in one day. It felt like legal risk was the second largest theme after AI.
Mhm.
Let's walk through the corporate and deal moves. Stagwell agreed to buy Q Strauss to bulk up Adobe-related consulting in Colombia, and Stoneridge announced its largest bus and coach mirror-eye camera program to date.
And Walray Renewable Technologies signed an engineering, procurement, and construction agreement to enter Australia and New Zealand. Those are tactical commercial wins and geographic expansion plays, not headline M&A mega deals, but meaningful for those companies' revenue mix.
Right. And the other thing is, small acquisitions and big program awards tend to show investors that revenue can be durable if delivery schedules are clear. Execution risk is the watch item here.
Nothing like a camera program to make a Tuesday feel exciting.
Quick credit note. Moody's upgraded the Central American Bank for Economic Integration to A2 with a positive outlook. That's credit positive for regional debt and can help lower funding costs on CABE-linked instruments.
Upgrades to supranational issuers are signals of stability. And for fixed income folks, those moves can tighten spreads on related high-grade regional debt. It's a small macro win in a day that was otherwise dominated by company-level headlines.
Let's get into the market movers and flows. NVIDIA finished the day down about 1%, but activity looked elevated heading into its fourth quarter results.
Volume was notable. About 114 million shares changed hands, which suggests some positioning adjustments ahead of earnings.
The rule of thumb here, high volume with a muted price move often means rotation or rebalancing rather than full conviction. Contrast that with the Bitcoin Futures ETF, which had a small price decline on very high volume, about 158 million shares, pointing to big liquidity flows.
And then there were several small cap names that saw outsized turnover and penny stock dynamics. Those moves tend to be retail driven and can make for noisy price action. Quick recap on consumer, Mizuho cut its Walmart price target, citing delivery network analysis and higher fulfillment cost risks. Delivery-related margin pressure is something analysts will fold into valuation multiples for large retailers.
So, follow-through commentary on fulfillment expenses in the next quarterly report will be an important catalyst. If management flags rising costs, multiples could reprice.
Let's do a short explainer for listeners. What exactly do lead plaintiff notices, high ETF volume, and a rating upgrade practically mean for a trader or a risk manager?
Good idea. Lead plaintiff notices usually mean increased headline risk and potential for sustained legal proceedings. For traders, that can mean bigger intraday swings and option volatility. High ETF volume, particularly with little price movement, often signals rebalancing or liquidity demand rather than conviction about direction. And a rating upgrade, like AA2, usually reduces borrowing costs and is a vote of confidence in creditworthiness, which can tighten spreads and make debt instruments more attractive to conservative buyers.
When you step back and look at this, it's a reminder that different investor cohorts are watching different signals. Legal teams watch dockets, quant traders watch volume and option flows, and credit investors watch rating actions.
Exactly. Okay, rapid fire updates in case you missed them. Insulet, BlackRock Coffee Bar, and Peabody had lead plaintiff notices. The JP Morgan Chase complaint expanded. Alphabet got an upgrade tied to AI. Nielsen launched Add Intel AI. Cabby got upgraded by Moody's. Stagwell bought Q Strauss. Stoneridge won its biggest Mirror Eye program. Wari moved into Australia and New Zealand.
Short reactions. Watch court dockets, watch customer announcements for Nielsen, and watch product release timelines for Alphabet. Those are the near-term drill downs.
Right.
Yeah, that tracks.
A couple of things to watch tomorrow. Any filings or 8K disclosures tied to those class action notices could trigger outsized moves. Also, any pilot customer announcements for Nielsen's new product and more analyst follow-ups on Alphabet would be meaningful.
And keep an eye on positioning flows into NVIDIA ahead of earnings. Options open interest and block trades can hint at the directional bias traders are taking into the print.
Let's wrap with some clear takeaways. 1. Legal and reputational risk was the immediate volatility vector. Those notices and the JP Morgan Chase complaint increased short-term headline risk across affected names.
2. AI remained the dominant thematic undercurrent. Analyst upgrades and product launches are shifting the market's focus from promises to adoption metrics. Pilots, pricing, and revenue conversion matter now.
3. It was a two-track day. Macro credit signals, like the Moody's upgrade, sat alongside idiosyncratic corporate bullets. Different investors reacted to different pieces of the puzzle.
And 4. High-volume small-cap moves remind us retail and speculative flows keep producing noise and execution risk in lower-price names.
Final note, this briefing is for informational purposes only. Analysts note the items we covered and data suggest areas to monitor for risk management. This is not personalized investment advice.
If you've got follow-ups or you want us to dig deeper into any single name, head to stockalpha.ai and use the Q&A feature. Ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll see you in the next recap after the market closes again. Stay curious and drop your questions at stockalpha.ai.